We're here for our weekly nickel catch up with Mark Selby. Mark Selby, how are you?
Great, sir. How are you?
Not too bad. It's been a fantastic week. I can see it's been a little bit of an exciting week in the world of nickel, and I want to rant at you in a bit as well. That's what's coming. So,
Okay.
so I
Uh-oh.
hope you're sitting comfortably. But first of all, why don't you
I
talk
am.
to us about the world
Yeah.
of nickel? What's happened?
Yeah. So nickel's back up over $15,000 a ton. Again, the macro winds are still blowing in a very strong way in terms of fundamentals. Again, inventories have been flattened out. There's been a sort of reams of Chinese August data, generally all supportive. As I think said last week, August stainless steel production's up 15% year over year. Looking September, they're forecasting 20% growth year over year. Now, I think that we're going to start to see some leveling out there. Stainless prices have dropped by about 8%. So again, if people remember what I've been talking about in the future, those stainless prices are sort of a good indicator of sort of where the market's going. So that combined with the fact that NPI prices, which were trading at over $1,000 a ton discount to the nickel price, are now trading at a $200 a ton premium. That's basically squeezed the margins for stainless producers. So I think the sort of we'll still see good year over year numbers, but in terms of actual production increasing higher, I think we'll see some consolidation here through the year end on that front. So, but generally, like the Chinese data, IP growth 5.5%, power generation was over 6%. Again, sometimes some Chinese economic numbers are a little smoothed, and that power generation number is always sort of a good check to see to see how that lines up with IP growth. And again, you're seeing a bunch of different materials at record high levels in terms of production and prices. So go China.
Go China, indeed. I mean, like stainless steel growth numbers up 20, expect to be 20% this month, and 14% year on year in August. I mean, just phenomenal numbers. Is it sustainable?
Yeah, no, it's, I think we're going to be, I think stainless steel production here consolidates through year end, and so the big thing is we're now getting to the end of September. October is the Philippines rainy season in the key nickel producing regions. So, that we'll talk some more at the end about things to watch for, but that will be, interesting to see is sort of, how those ore inventories start to come down. Cause I think, if you start to see some big drops in that, then you're going to see, you could see nickel prices, move back up towards that $7 a pound level, which we touched last week.
It's just an incredible year for nickel. It's really sort of become a little bit of a darling. It's under the spotlight that people are watching for sure. But I wanted to talk to you today about a couple of things. I want to talk about batteries. I want to talk about sulphate.
Yeah.
Okay. Because well, let's talk about stocking and restocking in sulphate, because that's quite important, and we haven't talked about it before.
Yeah, no, stocking and restocking. This is something that I don't think people pay enough attention to. So sulfate's a great example of. I mean, what we just saw in stainless steel with a massive increase in demand, apparent nickel demand, is an example of what happens in a restocking phase. And then sulfate last year was a classic example of what happens when you're in a destocking phase. So the thing to remember is, you have demand as a window within an entire chain. And so, when you're in a very high growth market, and sulfate production in China was growing, at very, very, very high rates. Well, there's a whole pile of nickel to make that sulfate that's being pulled through that chain to support not only that growth, but the growth that they think they're going to need in 1 month or 2 months or whatever, how long their supply chain is to get that product. And when all of a sudden they go from plus 50, and demand drops down to minus 20, you still have, a month or 2 months worth of inventory that's still expecting to be needed by a very high growth rate market. So you end up with this giant pile that you need to work with. And what was even worse last year was, a bunch of from the stats, you could see that a bunch of sulfate producers were quietly hoping, it's like, with the removal in subsidies from the Chinese government, which caused a huge drop in EV sales, I think they were secretly hoping that those EV sales would come back. So they kept production levels relatively high, which just made the pile even bigger. So then you saw huge drops in sulfate production. You saw, sulfate traded a massive discount to the nickel price for quite a while. But, again, now that we're through it, and production, is back on that growth curve. It just was up like this, dropped, and we're going to start to see it, continue on a very high growth rate curve. We're now in a restocking phase where, okay, I'm boosting production. And every time I boost production, I need to go and get, again, 1 to 2 months, whatever my supply chain is of nickel to go, feed that incremental production. So whenever you get these sharp shifts in production, up or down, you get these huge swings in apparent demand. So, so it's important to realize if you see a number that says, oh, we're down 20%, if you're in a destocking phase, actually, actual demand might be just down 5 or 10, and you're going through a short period of inventory adjustment. So, and on vice versa, if you see demand go up 20%, again, if you're in a restocking phase, actual demand might only be going up 5 or 10%. So, again, it's dangerous when you start to take a restocking phase growth rate and then try and extrapolate that for any period of time. So it's just as investors are reading headlines around commodity, short-term demand increases, just to keep that restocking, destocking thing in mind.
Yeah. Okay. And so obviously the main markets being China, Europe, and US. I mean, is there any sort of noises coming out of Europe? Well, any of those jurisdictions which say that they're expecting to be affected in some way next year, in terms of just trying to understand that curve? Are there going to be bumps along the way?
No, there will be, again, as production starts to ramp up, again, with the shutdown of everything in the second quarter in the West, again, when you're going from this kind of a growth rate on one of those drop-offs, again, we've gone through a destocking phase here. So, as, Western world production starts to come back up again, you're going to start to see, some restocking improvement and see some, the numbers, the demand numbers should pick up and start to see some pretty decent numbers there. And I don't think we'll expect that to come through, through quarters. It's not going to be anywhere near as sharp as China.
Okay, that's what I was getting at. It's really the sharpness of those bumps is what I was talking about, because I understand it's a slow reaction, whether it be a positive or negative demand in terms of the stocking levels. But is anyone sort of foreseeing, as a result of the enthusiasm that we've seen recently in the marketplace is great, but we have talked in previous months about, well, it's all great making all of this production, but if the West isn't buying, then they're going to stop producing, and that's going to create a very sharp reaction, which again, comes back to how they kind of manage this stocking and destocking. So, but there's no data to suggest anything severe.
No, either upside or downside, because again, China is able to grow, at double-digit rates, whereas, in the West, we really are kind of hemmed into some fairly low growth rates. Again, even in a rebound off of, what we just went through was a one-time massive correction, to the economic numbers. So there'll be some back and forth from it, but normally, when your growth rates go from +3 to -3, that restocking, destocking thing doesn't really kick in. It's when you're, on a 15 to 20% curve, and then you have to go to a -10 or 15% curve that you get, see these huge swings in the market. So
okay, it'd be interesting to see the numbers by the end of the year in terms of what the West is doing, seeing if they are spending money. Let's talk batteries for a sec, if we can. It's Tesla Battery Day next week. Did you know that?
I'm going to be all set up 4:30 next Tuesday. It's going to be live streamed, so everybody can watch it real time. So, I think it'll be. I'm very much looking forward to it.
I mean, truly are very, very excited about it, despite what's been happening to Tesla's share price of recent weeks. What's your expectation of what's going to come out of it? Is it going to be all positive and glowing, or are you nervous about it in any way?
Yeah, no, I think largely, they've been talking about the 1 million mile battery for a while. I think another big part of it is, Tesla itself is going to actually make more get more involved in its supply chain rather than, and doing it itself rather than relying on third party people to do more of it. I think, one thing that may come out, again, I've talked, very much about, I see the EV market getting stratified into, you're going to have 3 different battery types for a particular car model. So you'll have the cheap and cheerful, low range lithium iron phosphate, the middle range, and then you'll have the high end, latest, greatest battery technology that allows you to get another half a second off your 0 to 60 time for those people who do 0 to 60. The thing that I think we may see is an extension of the lithium iron phosphate to more car models, and I think people should not read that into nickel's over. The fundamental reality is Tesla needs nickel for their semi trucks, and again, a battery for a semi truck that's going to haul 40,000 pounds of stuff is a very large battery. They're going to need batteries for their pickup trucks, and then again the other higher end models in their fleet. So if they do something like that, it won't be because they're giving up on nickel. It's we know we're only going to have so many nickel units available, and it would be better to allocate this to the low end, and that'll free up more nickel for some of the sort of bigger, higher value products we intend to make.
There's room for everyone, is what we're saying. So, should that announcement come, it's a case of they're saying, well, look, there's just not enough nickel. So we want all the nickel we can get, but we may have to re-engineer some of the batteries for the kind of lower end usage case studies, right? That's what we're talking about.
Yeah.
Use cases, rather, I should say. Okay, so that's interesting. I can't wait to talk about that next week. Might be slightly later than normal as a result of the timing on that one, but yes. I think there's going to be a lot of exciting news out of that one. So that's fantastic. The other thing that's going on at the moment, a lot of fundraising going on, I noticed, Mark. I noticed Canada Nickel were one of them.
Very happy that you can see the company's giant bags of money in behind me. That we did a bought deal this week for $13 million.
Well done.
I'm very, very glad to get that. Again, we've said all along we're going to raise between $10 and $20 million between September and January. This basically gives us, allows us to go full steam ahead in our feasibility study once the PEA is done at year end. So, again, with our key theme with this project has been advancing it as quickly as possible. That makes sense, and getting that money sooner than later just gives us the capacity to really push it forward.
No fun. I mean,
the other big financing was what company we talked about last week or two was Blackstone Minerals. So again, another one of the rare nickel sulfide projects that's out there, and they've had continued drilling success. And I wish I was listed on the ASX. They pulled down $20 million to continue their exploration program. So it's great to see, again, more capital coming into the nickel sector, because as I said many times, we need more capital and we need more investors in the space, and we'll all win if that happens.
Yeah, I think that's a great, it's a nice little story. Scott Williamson there, nice guy at Blackstone Minerals. And we have talked, I think, probably 2 weeks ago about that. It's a nice little project in Vietnam. I've got to talk to you about something. Oh no, and also I know it's Neolithium. It's a lithium story, but I want to make a point here. So Neolithium, they've got an investment, but from a strategic.
It was great to see CATL come in for 8.5%. It's a feasibility study stage project. Right. So again, it's nice to see the battery downstream coming up, to help facilitate new production and new supply.
Yeah, it's a nice link to what I want to say next, because if you look at that, most strategic investors come in at feasibility or definitive feasibility stage. That's the point they want to enter investments in a company. And I saw a story at the end of last week, slightly irritated me. This is the rant bit, by the way. And I don't expect you to have an opinion or think about it, but I just want to say something.
I'll get my coffee.
There's a company called, and I'd like all nickel companies to be successful, but you've got to do it the right way. And I think there's a story that came out last week about Tesla wanting to buy a Canadian sulphate nickel company. Well, not you guys. It was a company called Giga Metals, and I know you know those guys well, as do I. And the headline was along those lines. Tesla looking to buy, Canadian nickel sulfate company Giga Metals. Their share price trebled and more off the back of that. If you read the article, it got nothing to do with Tesla buying anything. There was no confirmation of Tesla saying that, no evidence that they would. I think the automotive manufacturers generally don't tend to comment on any sorts of agreements they have. I think the company put out a very weak standard PR response, which was it's business as usual for us. We can basically we can neither confirm or deny sort of scenario when they know full well that Tesla are not looking to buy mining companies. I think there's no evidence of that. There has been conversations in the past about nickel, but nothing's happened. What they did say was they will issue large long-term contracts, offtake agreements for people who mine ethically and economically. Okay, so that was the actual statements. But the share price trebling means, and here's the bit I'm irritated by, shareholders of that company now, he bought in above the price it was at the beginning of the week, and much higher. I think it went up to, I saw 186, may have gone higher, I don't know. They're underwater, and they're going to be underwater for a long time. And I have a problem with that. I have a problem with the exchange not reacting. I know that stock was halted a couple of times. I have a problem with the company not, denying it properly, because that was not the case. I know it's nice to, and I even noticed at one point the company retweeting one of these stories on co.ca. I think it's unacceptable behavior. And there's a bunch of people now who have lost money off the back of that. And I hope there's some repercussions for that, because people need to be held accountable. But I suspect there won't be. But there's a bunch of people who perhaps should have done their homework, bothered to read the article, not invested off the back of hearsay, gossip, and promotion like that. So that's my rant. I'm not expecting you to comment. I don't want you to get into trouble, but yeah. I can say those things because that's exactly what the Crux Investor Club is about. What the Crux Investor Platform is about. It's to stop things like that happening. The investors will have to take responsibility themselves, because at the end of the day, they made those bets without doing the proper homework. And it's what I call pub talk. I think that, at the end of the day, it's their money. They can do what they want, but I think the company and the exchange should be held accountable as well and do something about it. We better move on, because I
won't comment specifically on anything, but again, I think one thing that we've talked about capital costs before and operating costs before, and again, really try and encourage investors, is to look for benchmarks, comparisons of, where a similar project has been done, to get comfortable as to whether this company's operating capital cost numbers are feasible. And the same thing for, in terms of looking at, again, in terms of strategic investors and so forth, just look at, what has the strategic investor industry done relative to, in our case, mining, and examples of that, to see, okay, is said rumors, look like it's credible or not? Because these rumors, do come out from time to time. So spend a little extra time, benchmark. And then if you're comfortable with the benchmarks, then go forward. So.
Yeah, and it's a good point. You just reminded me, there's another thing which kind of, again, I think that the company needs to be careful here, because, one would need to look at whether there were any warrants due at the time. And if there were, does that explain why the company didn't quickly jump on this? I mean, that would be not good. And, we will look at that. Because I think that'd be pretty serious accusation to make, which I'm not making. I'm just saying, if that was the case, I think this company's got a different set of problems. And I think there's a trust factor, which the company needs to, and a brand which needs to be looked after. And I think if this process is indicative of how the company wants to behave, then I think that's problematic. I think it's a nice asset. I know the guys, the management team, and all three of them, senior management team. And I hope they come back and they were due on the show tomorrow, but they're not going to join us for a couple of weeks until this dies down. But we will be asking them that question, because I think they need to answer it. So like I say, we better step away from that one. I don't want to put you in a difficult position, but that's my thoughts on that. I am kind of a little bit furious about it. Just back on the macro for a second. The Korean government, they have, as I understand it, tried to sell shares in their Madagascar nickel project and Batavia recently. I mean, why would they do that? I mean, I understand there's a lot of debt there, a lot of debt. Yeah. But in this market, I mean, why haven't they taken the view of, well, perhaps let's see where this nickel market goes, or do they think this is as good as it's going to get me? What's your take on why they would want to try and sell?
Yeah, I haven't heard whether it's the government or they had basically a government funded called Cores. And unfortunately, Cores made a series of investments back in, I would say, sort of the boom time from 2005 to 2012 in a bunch of different development projects, which didn't quite pan out so well. So, for the last, I would say, 24 months or so, they've been quietly winding down their positions in a bunch of these investments to just get the capital back.
Right.
And they're, I think, have changed in terms of strategy, in terms of how they're going to deploy capital. So to hear that they're looking at, selling down their stake in Madagascar, I'm not surprised. Again, we just saw Goro, is going to go into care and maintenance, and Madagascar already is in care and maintenance. So, there's no sense putting more good money after bad. So there's times where sometimes it's just getting cents on the dollar and then driving on from there is the best strategy.
Okay, so there's no reflection on the nickel market. That's just that project like Goro, which we talked about last week. It's got its own set of fundamental issues. Okay, fine. So I just wanted to understand whether I should read anything into it or not, and it sounds like not. Question sent in by someone: is there a difference between battery precursor and sulphate? Can you help us understand that?
Yeah. So again, everything ends up with the battery in the car, and there's a whole series of steps to do that. So you have nickel sulfate, cobalt sulfate, and a bunch of other, individual products that get blended together to make the blended chemistry that the battery is going to use, and that is the precursor. So there's a whole series of companies. There's some very high-tech chemistry that's involved in terms of, blending the materials in a certain way, and treating them as they're getting blended in certain ways, to be able to make sure that, as a blend, it has all the properties that the battery maker, which takes the precursor, and puts it in a can, to make it into a battery, that's how that chain works through.
Got it. Okay, understood. I hadn't understood it before then. That's good. And just to finish up, because I know you're quite tight on time. I think you've got an important phone call to do in a few minutes. I think with Elon Musk, wasn't it? I'm joking.
Yeah. No.
Let's not.
I am not in discussions with Tesla at this point in time.
You've got to retain some sense of humor here. Okay, so things to look out for this week, you think?
The key thing here is, one, coming back to the triangle in terms of Chinese demand and NPI. It's good that NPI prices are at a premium, so the Indonesians haven't flooded the market yet in China. Inventories have stayed flat. What you should start to see in the next week or two is to watch out for whether those start to come down. That will be a key, I think, trigger point in terms of sentiment around the nickel price, and could move it. And on the demand front, again, we've had a great big run up to this point. I think we kind of trade sideways from here. So
okay, so China data suggests things are still good for a bit, we hope.
Oh no, things in terms of China is still. I mean, on the macro, all the macro numbers coming out in August were very good. September's seasonally a strong month, and everything's sort of pointing. Again, if you look at a whole range of other commodities, China's again still well entrenched on the reflating path here. So
okay, so actually, just one last thing on Tesla, and again, for my own gratification and kind of maintain a sort of level head about the story which appeared last week. I mean, do people like Tesla or trading houses, big metal trading houses, speak to junior mining companies all the time, or does that not happen?
Yeah, no. I mean, that's, I think, important for investors to realize that, anybody who is an emerging metal consumer or a large trading house, they have people whose job it is to, keep track in terms of what's going on in the supply chain. So yeah, no, and they attend conferences, and they keep in touch with you as regular milestones develop, just so that they know what's going on in the industry. So yeah, we're you're talking to people on a somewhat regular or milestone driven basis, all the time, and again around the world, with different groups, with those people whose job it is to keep tabs on things.
But that's what they're doing. They're keeping tabs. They're not engaged in discussions to buy you or others. It's just I need to know what my future supply looks like.
Yeah, no, exactly. And then again, for trading houses, what their investment opportunities, what offtake might look like, and so forth. So, yeah, no, they're keeping their finger on the pulse of what's happening. So,
Mark, I know you've got a stop dead date, and it's not with Elon Musk, but you do have an important call to make now. So, thank you for making time seriously this week, because I know it's quite tight at the moment with various people at online conferences and meetings, and having just raised the capital. So. We look forward to speaking to you again next week. And you must come on and sort of tell us what you're going to do with it, with your Canada Nickel hat on, if you don't mind, at some point.
Nope, we'll be more than glad to do that. So, all right, take care, and we'll see you next week.